All right. Hi, everybody. Welcome to this webinar. We are going to be talking about something that is absolutely critical to every business everywhere, and that is your financials. I'm Danielle Laughlin. I am the founding attorney here at Sage Business Counsel. We love to help clients grow their companies with confidence, and the purpose of these webinars is to keep you empowered. So I am really excited for you to meet Paris Williams today. First and foremost, I consider Paris a friend of mine, a kindred spirit. When we first met, it was immediately obvious that we were the same kind of people. And you're going to find her energy infectious. I promise you that. Also, she's going to reveal some key insights for you so that you can have financial clarity as a business leader. You can be an entrepreneur, you can be a CTO, COO, CEO. You can even be a CFO and glean a lot of value from what Paris and her husband James offer. So, we're going to have a very conversational interview with Paris today. If you have follow-up questions for her, don't worry. We're going to provide you with all the contact information that you need to make sure that you can reach out and connect with them on social and have all of that in case you're ready to take it to the next level with your strategic financial planning. So, Paris, I'm going to hand it over to you because I want you to tell everybody about you, about James and your company. Who do you serve and what is your mission in life?
That's wonderful. Thank you for the beautiful introduction and putting in next level financial. Okay. Can I bring you with me to wherever I go? Because that would be great to have you
Ultimate hype girl.
yeah. So thank you so much, Danielle. I'm Paris Williams. I'm the CEO and co-founder of Next Level Financial. So we are a fractional CFO company. When I meet people, I just say that's a fancy way to say we support business owners with their finances, which for the most part tends to be something that folks struggle with, that they don't want to deal with, that they have maybe even some shame around. And so, what we like to do is build a relationship with our clients such that it's more than just the facts and the figures and the numbers, but it's really understanding that the business is like an outflow of them. A lot of times we're working in family businesses. And so if you jump right to the numbers without really understanding why they started the business, why they're passionate about it, and really seeing the owner as the expert, we don't come in like we know everything and we're going to tell you. It's a partnership. And so the way that we run our business is very much so like we are on the team with you and we provide visibility that owners haven't had before so that they can make strategic decisions. So we started this business in 2018 in Chicago, and we transitioned our business to the Atlanta Metro in 2022. So we have clients all over the US, but we're really focused on the Atlanta Metro. And we are also heavily focused in the real estate industry. So working with real estate developers, architects, engineers, but really service-based businesses, like they are providing a service. So I think a lot of the things that we're going to talk about will be relevant to anyone that is, that has a service-based business.
Amazing. And that's what we do, right? We primarily work with service-based businesses as well. We are heavily focused in real estate as well. So it's great that we are going to be able to provide this from your perspective, because I think that our client base and a lot of the people in our audience are going to take a lot of value from what you're saying. We also work with a lot of technology companies. And so, it's kind of a similar idea, media. So it's all about reputation and relationship when you're in a service-based business. And so when you are leading with the mission and the purpose, what you're doing is you're showing them that you understand you're a service-based B2B business yourself.
Yep.
And so, you know what you know, and that's how we are. We're a B2B service-based business. So this is so exciting because we get to take our kind of I guess, coinciding and kind of like running tangential expertise, and have an amazing conversation today. So I am just really excited. I've been waiting for this day. I got to be honest with you. So today, what you're going to discover is the key frameworks that business leaders need to know in a fast changing business environment. You're going to get the most common mistakes that service based businesses make and the actionable steps that you can take to address them. Paris is going to talk to you about the strategies to stay flexible without sacrificing your long-term financial vision. This is really critical, especially in uncertain times, which seem to pretty much be what we live in every day now. And then finally, proven approaches that you can take to stabilize your cash flow and to drive your revenue for sustainable success, which cash is king and flow is queen, right? Am I right?
There it
Somebody
is.
said that to me one day, and I was like, "Oh, I love that."
It is so true.
Awesome. All right, so let's get started, Paris. How can business leaders make confident, scalable financial decisions in a rapidly changing business landscape? This is we inquiring minds need to know this.
Right. I mean, listen, I think I could name off 25 different things, but I'm just going to pinpoint on two. And one I touched on a little bit earlier. The first one is real time visibility. I think a lot of business owners are looking at their bank account, they're looking at their top line, and they're not having real visibility. So, part of it is that real time visibility is part of what we do with forecasting and things like that. But that helps you to be more confident when you make your decisions because, business owners, again, can come across very confident, but I have learned, as you probably know, when you get in these meetings, sometimes it's like, I know I seem confident, but I don't really know. And to be honest, I didn't realize that CEOs of larger companies, and large to me is 10 to 20 million, right?
Mhm.
They're also dealing with some of that same anxiety that you have when you're a small company with three people on the team, which is I'm still making decisions based off of my gut. I'm still just looking at my bank account. And if I make payroll, I'm good.
Yep.
So we're
Yep.
just going to keep on going with that month by month, like, oh, more sales, we're good. Oh, and so the visibility part is huge. The second thing is really having a financial roadmap. I mean, I know people don't like
Mhm.
budget anymore. That seems so old. Who's doing that? Let's call it a financial roadmap.
I
But
love it.
I
And
mean,
it
but
is budget is scary, right? Like it's like budget sounds restrictive. Like,
yes.
and as an entrepreneur, I could say, when you start telling me that I can't do something, that's when I'm definitely going to be doing
uh-uh. Here's the thing. We're going to give you visibility so you can make the decision, right? Because I think there's a joke about CFOs that we're CF knows, meaning that
Well,
everything
at
is
least you're
about
not deal
cut.
killers, Paris, okay?
Everything is about cut and no cost cutting. And the reality is, if you've really built a financial roadmap, it's there to help you. You're coming back to it, you're looking at it. It's not about one person who built something, it's the team made this decision. So we need to make sure that we go back to it. We don't just put it in our digital drawer and hide it away and then look at it again at the end of the year or never again.
Yeah.
So I would say those are the biggest two. And, we work with real estate developers. So, it's a cyclical market and they're dealing with shifting market conditions. Maybe there's interest rate fluctuations,
Mhm.
project timelines. You might have a really long project timeline. And so making sure that you go back to your roadmap is super important, especially when you have all those things in play.
Yes, I love that. It's also, it's things like scope creep and supply chain issues. I mean, there's a
Yes.
lot that comes up where, the best laid plans, if you don't go back, and if you're not monitoring it, it can snowball. And then that's when people like me get involved. And it's like,
Yes.
oh, I love to recover money, but I really wish that we could have prevented all of that on the front end, right?
Yes.
So I totally understand that, and I think a lot of people in our audience also can understand that as well, because road mapping is wonderful, but if you stuff it in a drawer, which is often what some of these estimates have, the estimate goes out and they never look. It's like that, like, wait, you already estimated. Did you ever look at that again? It's like this, it's the same idea. And look, no judgment. Anybody out there who's like shielding, no, trust me. I do not do math well. I'm a lawyer. I'm not here to try to make light of very serious situations, but I love what you're saying. And I think this is just incredibly insightful and coming from, professionals that see this day in and day out. Some of the smaller companies feel like they're doing it wrong, or maybe they have some imposter syndrome or something. And
Yes.
it's like, no.
No. You're good. And at the end of the day, it's almost like, I mean, comparing it a little bit to parenting, like there's no right or wrong way. There's a better way, maybe. And we have this like visual where it has these different levels, for next level. And at the bottom of it is survive, and then it's like sustain and succeed, all the way up to steward. And
Yes.
so it's a learning curve, because maybe you were at survive for 3 years and now you're at sustain. And, as you're moving up, your roadmap will change. And sometimes we'll miss the like jump, like, oh, look that I'm at the next level of succeed. And I don't really have a team yet to support me or to build that roadmap. So I would agree. It's no judgment at all. And also there are good things that come up that you still need to go back to your roadmap. We've had clients who it's like they projected that they were going to make this much in the year. We're halfway through the year and they're like way over the projection. So now we're like, what are we going to do with all this extra cash? That
Yeah.
has happened too.
Yes. And it probably happens a fair amount when you get somebody in your corner that can help you make more strategic decisions on the front end about how you're investing those dollars as well. So I think there's probably some proof in the pudding with that. Okay, so what's the biggest financial blind spot among service-based businesses, and how can they address it?
I think this goes back to timing. So a lot of service-based businesses work on projects. The timing of when the cash flow comes in and when the expenses go out, a lot of business owners don't really have a good handle on that. And so it's like, I made a sale, I closed a big deal. Well, when does the money hit? I mean, is there a way that you could break that down into parts? Do you get a deposit? There's a lot of focus on the top line, making that sale, getting more sales. And so one of the big things is really just it's back to cash flow. If you're not tracking that and the way that you're putting that in is such that like you already have the money in your hand and you don't, you're gonna have some cash flow issues, right? So just accounting for that. I mean, and this goes back to forecasting. It becomes really helpful for this kind of thing because we're not gonna account for that sell right now. If
Right.
that money is not in your account, we're gonna build that into your long-term forecast so that we have a real idea of where your business is.
I
So that's one of the ways to address it.
And even outside of real estate,
Hmm.
in a service-based business, I mean, even our firm, for example, just to onboard a client is a very labor-intensive deal, right? And so when someone comes in and maybe their need is very minor, it's like we'd love to help you from a heart place, but
Yes.
financially it doesn't make sense. And there were many hard lessons that we had to learn when it was like we were trying to help people, but it was costing us more than we were making just to get them into our systems and to really understand enough to be able to help them. I think a lot of times, service-based businesses don't think about some of those hidden costs.
Yes.
And yeah, so what do you think about that? Like how does that play into, because we try to get them to get deposits too, because like you're speaking my language. I'm like, I love everything you're saying. We often hear, well, I don't want to get a deposit because my competitor is not getting a deposit. Well, then let your competitor go chase the dollar
Right.
and hire somebody like me to go, try to collect money. But like
Yes.
you need to get your deposit on the front end. You don't want to be that competitor. You want to be better than that
There
competitor.
it is. I mean, you got it down. And the nice thing is you learn the lesson, right? Again, we're being gentle with ourselves. Part of it is you learn. And also when you're starting out, maybe you don't believe that you have that value yet to get that deposit. Because you got to believe that first before you get that from somebody. And then basically that's just the system. There is no negotiation around that, right? Like I don't negotiate with any of these tech companies. When I go to sign up for something, they take the money out of my account. So once we figure out that, like, okay, this is the system and this is where it helps to have a team, right? Because service based businesses, if you're still on the technician level, to use the language from eMyth,
Yeah.
like you're also doing the work and building the system, it makes it a lot more trickier to work on the business and
Yes.
to create a system like that for a deposit. And if you have a system, listen, we have a client that they always collect a 50% deposit on their service every time. It's just that's their thing. All of the salespeople know, everybody knows. Well, that gives them some leverage to take advantage of opportunities when they come up.
Yep.
And it's just like that just is the way it is. So I think it's a lot harder if you've been in business a long time and you've done it a certain way, and
Mhm.
then you don't have the belief that your clients will actually come with you on the new journey. And guess what? Some of them won't,
That's true.
right? Like
Mhm.
some of them will leave, but you have to decide, oh, okay, I'm moving up to this next level and this is what it requires.
You have to close one door to open another door. And there's another adage, it's like some people are in your life for a reason, some people for a season, and some people forever, right? It's the same idea with clients. Some
Yeah.
clients are there to teach you. I've
Yes.
I've had some clients teach me a few things.
Me too. Me too.
And then also I've got clients that I've got years. I mean, is some of the clients we have here that have been here for 5 or more years, which is half of our existence. I mean, that's
Yeah.
incredible. And then
Yeah.
most people fall into the season, right? We're not necessarily going to be a long-term solution for everyone. I think there's also that aspect of it too. And I feel like mindset is a lot of what comes in. And you mentioned shame earlier too. And I'm not going to digress because we got to go to this next question. But that's another issue too, I think, is the shame and the fear and like not letting fear guide what we're choosing to do or not do. And I fall victim to it even as a mean lawyer, I still kind of fall victim to that as well sometimes. So I think it's important to have very transparent conversations like this. And I appreciate that you focus on that. It sounds like you're using this language with your clients and with your team as well, which is really encouraging too. All right, so let's see how do you balance the long-term financial planning with short-term agility? And I'm gonna add a little bit here. I'm gonna add a little bit on this question. It's short-term agility, but it's also short-term gains.
Yeah.
Right? A lot of people focus on the short-term gains. And so, yes, you need to be agile. I don't know. I feel like we are learning that in real time now in a post-COVID world where agility really has to be, especially with AI and all the technological advances. So let's maybe flip this a little bit. How do you balance long-term with short-term gains? I really want to know maybe that a little bit more than the agility part.
Yeah. It's interesting because one of our clients just had an opportunity come up for them. Speaking of a gain opportunity that showed up. And this happens sometimes, right? And this is where you want to call your finance person because you have an opportunity, right? So I can't share all the details, but it's to buy a similar line of business, and they would get a big book of business that would help to advance their company right now. So it's pretty exciting. And also some of the sort of boring things like reserves. If you don't have that bad boy in place, like sometimes the long term planning is just as simple as, yes, having a 3-year plan in addition to your 1-year plan and your forecast. You'd expect me to say that.
Right.
But also, that 3 to 6 months reserve will allow you in today's economic climate to be able to take advantage of an opportunity like our client is considering right now. And, you know, again, I learn from them all the time. And I'm like, well, wow, if you position yourself and you really have like a layered strategy such that when an opportunity comes, you're ready to consider it, right? And of course, it depends on your level of risk, your long term
Yeah,
goals, your
right.
roadmap. But at the same token, I'm like, this is so great that they are set up with their reserves right now. So it allows you to weather storms. Yes, of course, your business is going to have those ups and downs. It's going to be cyclical, but also taking advantage of opportunities, you know?
I love that because entrepreneurs love the upside.
Yeah.
None of us went into business for the downside, right?
Oh,
And I think, this is why I sometimes I feel like I'm trying to like drag my clients along with me, I'm like, "Hey, but this is a solid opportunity or a solid strategy." And sometimes it's like the risk tolerance maybe is
yes.
a little different. I also have some clients where they're trying to do some things and I'm like, "Wow, I can understand why you would want to try to do that. But this is not the government's first rodeo. Just remember that." And I'm not making a judgment call. I'm not here to judge. But there are some things we're not going to be able to get you out of. And you just have, and so it's almost like the risk tolerance is something that it goes to financials, it goes to the bottom line, but it goes to the prudence of
Yes.
trying to jump on that opportunity because not every opportunity is really for you,
Right.
and you need to know that. So I love that. I just really do love that.
I'm
And
so glad they have you on the team because I think our best clients have a whole team so that everybody can have their visibility moment, right? So the CEO that's like realizing back to our earlier conversation, I'm really good at my business and I know I am. And I got it this far this way. And now I'm at a point where I need a team. Our best clients, when we come to the table for their leadership meeting, maybe it's, bi-weekly or once a month, it's not just us, it's their sales leader, it's the CEO, it's possibly their attorney, it's possibly their CPA. Listen, your CPA who does your taxes, they're going to be focused heavily on those taxes and they're going to provide insight on that. And then we're going to be trying to help them to grow the business and scale the business. So we're going to be shining visibility
that's
in that way.
that's a tension, even between different financial professionals. There's
Yes,
tension.
there's tension, but we like that tension. We like it and we
Mhm.
encourage it because your tax provider, whatever their philosophy is, for the most part, they're just trying to make sure you pay your fair share of taxes and you're not paying any more than that.
Right?
And our whole thing is how can we help you scale your business and have visibility so you can make greater impact? So it's
Impact.
we
Yes,
need to
it's
be in the
different.
same room, but we have a different approach to advising.
I love that, and I agree with you. One of the questions that we ask our clients in the beginning, who's doing your taxes? Do you
Hmm.
have a CFO? Who's going to be the person? We've got a client where the CFO is our primary point of contact.
Yep.
We've got other clients where it is the CEO. Sometimes it's like an EA, kind of managing, with the CEO and the team. It could be a variety of different skill levels and skill types. We don't need everyone on the team to have a bunch of letters behind their name or have these that's not the point of it. It's everybody has a different lens. And we're kind of like you, like we are always looking at risk, but our risk tolerance is a little higher than the next guy, right? Like your GC in-house is probably going to have a much lower risk tolerance than like us as a fractional, because we're able to rise above the trees to see the forest. And we also have the insight from working with a variety of different clients, similar to how you are. And so I really love that. And I love that you're bringing that insight and meeting them where they are with their leadership, which is fantastic.
I mean, I think we can't come in. I meet a lot of advisors, and I feel like sometimes there's this way of coming in like we have all the answers. We know what we're doing. And so it's all about your approach. And so like one of our values is to connect and to contribute. We're contributing on a team. So I hear sometimes advisors talking about business owners like, you wouldn't believe them. They did this, they did that. And I want to say, and they also built a $20 million company on their own in the last 10 years. Now, I know they broke some rules when they did it, and some things need to be cleaned up. But let's pay our due respect to our clients and not come in all judgy after the fact because we can advise them. So back to like, it's a partnership. Yeah, you have some things to clean up. Like, okay, your auntie's been doing your numbers the last 10 years, and that's not cool.
Or you're the CEO and you're still doing your own numbers. Oh, that's even worse. No judgment. No judgment.
Let's
but yes, we want to fix that. Yes, we want to fix that. Yep. I love it. I love it.
It's a team. T for team.
T for team. I love that. I love how you said too, we want to connect.
Yeah.
Like we talked before we even started recording about being high eyes on the disc profile. And I think it's one of the reasons we like, it's probably why some of the people watching this are like, get on with the point here. But when you have a high eye, it is about connection. And when you're in a service-based business model, it needs to be about connection, because that's what reputation is all about, right? Like your reputation is not just the end result or the product. It's how people feel while they're being served. And, do you have boundaries in place? Do you have grace when you need to have grace? And not trying to fit them into a box, because every business is different. I mean, one developer's business is different than another developer's business, even though the service model may look very similar from one to another. So I love that. So let's see, what role does cash flow maximization play in creating business stability? And how do you approach it with your clients? I love this question.
Yeah, I mean, we touched on it a little bit. You got to understand the inflows and outflows of your cash. And that's a big part of the work that we do with our clients. So one of the things that we come in and hit on pretty soon is timely revenue collection. Because I mentioned that before as a blind spot, especially if you're growing rapidly and you've got projects coming in all the time. I know it's a great problem to have. But also when that starts happening and you have a ton of new projects starting, the revenue collection can fall off. And so one of the things that we do is work really closely with our clients. And typically they have an accountant on the team or a controller on the team. And so we make sure that they have some systems, if they don't already, get those systems and practices in order pretty quickly. So that their cash flow can be actually flowing. And so another thing is negotiating favorable terms, right? Like nothing, it's not final. Like you need to go back to your vendors, go back to your lenders, and we are often a part of that conversation. It's like, oh yeah, we will join you, because there's sometimes where the CEO is very busy and and we're like, hey, listen, you need to renegotiate these terms. It's been 2 years. So let's go back to the table. So I would say those are couple of the important ways that we support them with cash flow. The main one is just that collection, having a system in
Oh
place
my
for
gosh.
collection.
Okay, so Paris, you're gonna love this. So we have like what we call the five pillars of sound business, right? And so it's like growth, what's the sales and marketing like? Does that align with production, right? Which is really reputate what we call reputation. Of course, you have HR and culture. Of course, you have your management structure and that legacy building. But number five, which is really kind of like the most important one, but the one that we think they find the most fear around is financial controls.
Yeah.
And we look at, first of all, are you on a net 90 with
Yeah.
anybody?
Yeah.
We cannot have that. I've had to help people, especially in the government contracting area, where
Mm.
they're helping Uncle Sam, honey. Uncle Sam's making major
Hold them out. Yep.
and they're paying their taxes on time too.
Yes.
But they're not getting paid on time, or they're getting paid net 90, which is really net 180 for anybody out there.
Yeah.
It's net 180. Doesn't matter what that contract says. And so I love that. It's like, and then timely revenue we used to do in the beginning, it was very haphazard. It was like, whenever I would remember
It's
it.
the beginning.
Yeah. And then it was like, okay, well, every like month, or then it was like every 2 weeks, sometimes 3. And now it's like every week, honey. If you've got more than 500 that's been earned and billed against your file, you're going to get charged, because we don't have big upfront retainers necessarily. We don't want to strangle your cash flow.
Yep.
We do not want to strangle cash flow, but you will put a credit card authorization on file. And if you incur this amount of money, you will expect to be paying each week. And I think for some people, it's kind of off-putting, and it's always a red flag, because I'm like, well, how are you managing your cash flow?
There, because the people that are doing it will understand how it works on the business side, and they'll go like, oh, that makes a lot of sense, because that's what we do, right?
Yeah.
So like, in real estate, it might be milestone-based payments. Well, they get that,
Yes. So important.
It is
So
really
important.
important. And you
I
just have to have, as you move up, your system gets tighter. That's just how it is. Like,
It's true.
hopefully, you get a little bit more structure, and that includes your cash flow strategy. Like, you're gonna have more structure as you
Yeah.
go up.
You're also going to mature more.
Yeah.
This is another thing I see, and I know you've seen this too. If your mindset around paying your vendors or your employees or anybody who's helping you is, oh, I'll pay them when I can, or, oh, I need more time, or anything like that, then you're going to have a very difficult problem collecting from your own customers and clients,
Yeah.
because your mindset is about, you're not in a flow state.
Yeah.
Cash is not flowing. Like you
Yeah.
said, the inflows and the outflows,
Yes.
and so I think there's like a two-sided coin here, where people don't understand their energy around their money and their energy around how they view things. Like, well, I'm paying them all this. Look, if you're not getting value,
Yeah.
that's a boundary, and that's a conversation to be had. You don't withhold to negotiate, right? Like,
Yeah.
and so I love that you help with that, because it is a big issue, and we see this a lot. And oftentimes, I want to say this too for the audience. If you own a business, or you are a leader in a business, and you are finding that you're having difficulty collecting from your customers or clients, the very first place to start is inward, in the mindset and the culture around finances. And if you don't want to end up in litigation, and you don't want to pay a lot of money to litigation law firms, then the best thing for you to do is consider calling Paris and James, so that they can help you get your policies and procedures in place, and make sure that you understand how the money's flowing in and out, and help support you to mature in that way, because you can be in business for 40 years and still be very immature in this
Yeah.
subject area.
That
Also,
is
I
that
see
is
that a lot.
totally true. And you have to want that, and if you want that, then it's available to you. I mean, you can work with us. There's plenty of other people out there as well. A good starting point is really a great accountant on your team to make sure your financials are in order, because we do get calls from people all the time, and literally large companies, and the CEO is still doing all of it. And one of the qualifications to work with us is that you have an accountant in place. They could be a fractional, but they are getting your financials done on time every month. Like, you have that part already built in. And so there's a starting point. You
Step
start
one.
there. Step one.
And if you want to sell, every entrepreneur is looking for the exit strategy. Everybody wants, in real estate, especially in construction, and PE is coming in. They're rolling up a bunch of these subs. It's a very exciting time for a lot of our clients. And what we see time and time again is, hey, they're willing to pay you this amount of money, but you know what? If you don't have 3 years of clean audited books, and you don't have 3 years of corporate and personal taxes, it's
going to be real difficult.
Very difficult. And so you lock yourself in for this 3 months of exclusivity during due diligence. You're paying lawyers. You're distracted from growing and actually servicing your clients because you're looking at your shiny object. And then you get to the end of it, and guess what? They're not willing to buy you anymore.
Yeah.
It's sad. But it's like, we see this time and time again. And I try to tell them, look, I'm not going to do your books for you, obviously, and you don't want me to. But, I need to see them. I need to see what they are, and I need to know who's doing them. And even at my level, which is not a high level of expertise, I guess I'd call myself, an unconscious competent in some respects with financials. But even somebody like me can take a look pretty quickly and know, like, something's not right here. It's not making great sense. And so I think it's also like just getting some people to be able to make it make sense, so that when a third party looks at it, it's clear. It's not that what you're saying is untrue per se. It's that how you're representing it doesn't make sense. And then that impacts the trust.
There it is, right there. I mean, we had a client, one of our amazing clients that we've been working with for a couple of years, transition ownership. So there were some investors that came in, and I mean, it was kind of a long, 8-month process, but they were so happy that we had the financial reporting. Don't get me wrong, they liked us, but after that, they loved what we were doing.
Exactly.
Because you don't want to get in these meetings with these investors. They want clarity. They want answers about where you are and where you're going. And so when you're bringing somebody else to the table, and it's not just your internal group of the founder and a couple of people, it's a different standard as far as reporting goes.
Wholeheartedly. There's no, and it happens with us too. Like, they're kind of scared. They're like, well, I don't know if I want, if I want them to know that I have a lawyer. Yeah, you do.
You do.
Yeah, you really do. And financial is even more so. I mean, I think some companies aren't sophisticated enough from a legal standpoint to need a ton of support there all the time. But financials, like, everybody needs that all the time. And maybe you're not at a place where you can afford more strategic advice per se, but you can bring people in just on a more project basis, like, hey, we're getting ready. We want to have this conversation. We've had our books being done, but we don't really have any insight. I had a recent conversation with a client where, just in the 30-minute phone call, I helped them see that they had a whole line of business that they were not getting any consideration for in an LOI. And I'm like, but what about this over here? And they were like, you're so right. I'm like, yeah, but you paid the 6% commission to that guy that found this buyer for you. That's fine. It'll just be half an hour of my hourly rate. You're welcome. But you don't want to call the lawyer. You don't want to call the finance. You don't want the CFO. You don't want the deal killer. You just want the sweet talker who's going to sell your soul to the devil so they can make a commission. Okay.
No hard feelings.
No hard feelings. A little burned by that, but it's fine.
We're visibility. All our thing is to do. People find a lot of value when we shine light on something that they had not considered, right?
Yeah.
That's part of our role in different ways, is to just bring that visibility. And
So true.
hopefully that impacted their next steps,
Oh,
and
and I
they'll
think
come
it
back to
did.
you.
Oh,
Hmm.
absolutely. It absolutely did. And I say it facetiously here because we're having a conversation. And I think
Yeah.
sometimes it's good to point out some of those examples, but it's like
Hmm.
we got it. You said shine a light. You need to be willing to see the blind spot and accept
Yeah.
the blind spot.
Yeah.
And there's also fiduciary duty.
Yeah.
And not everybody has that. And some people do, and they take it seriously. And you need people in your corner
Yeah.
that know what fiduciary responsibility is, and they are willing to live by it.
Yeah.
It's
Yeah.
very, very important. And so, yeah, I totally agree. And yeah, I love what you're doing. I'm like, oh my gosh, over here, I'm thinking, I'm like, oh, refer. Because this is the deepest we've ever really kind of gone into. Maybe some of what we both do, because we kind of see each other out and about. It's not so much a deep conversation. Um,
Yeah.
I'm learning a lot from you.
I'm learning a lot too. And I
Yeah.
think also, just like attorneys, they're everywhere and you don't know who's who and what did they do. So I think it's also really good in this fractional CFO space to just be really clear about who we work best with. And it comes
Yes.
out more in this conversation,
Yeah.
right? Like, as I share the stories, we know from jump. Like, I always tell a joke about one of our longstanding clients. From day one, we had a conversation with him. We sat down. He was like, all right, you ready? Because I got a lot. And he just went in and he told us the good, but he was also just an open book about, and then there's this, and then there's that, and then we had this like 3 years ago. And
Mhm.
I was like, we can work with this guy
Yes.
because he's just an open book, and we're not going to go in thinking everything's perfect. We know the messes that we're going to get into, and we can help over time to clear them up. But there's something about, not just saying real estate companies in the $5 to $20 million revenue range in Atlanta. Yes, and the CEO is typically very much an open book. They're, if not the founder, it's been passed down. It's a family
Yeah.
business, and
Yeah.
so there's small things that you learn over the years about your best fit.
That's true. It's so true. And in the world of entrepreneurship, I also think this is important to say. If you're again, no judgment. If you're in it to make a quick buck fast any way you can, legally, lawfully, and compliantly, I will add, then, great. Like, that's great. Get in, get out, get your money. But we also work best with purpose driven legacy builders, right? Like, you have a desire to do it right because you
Yeah.
want to do it for the long term. And so yes, and it's important. We recently changed our website to kind of put some of that stuff out there too. We were a little shy to do that in the beginning. It felt kind of restrictive, and everything that's happened since then is that we're getting better clients that are more aligned with who we are. We're giving them more value. We're having a lot more fun doing what we love to do.
Yeah.
And, it sounds like you also have embraced that. And so it's not just the financial strategy here, it's about your business model in general and how you show up in your marketing to attract the right people. And so that leads to the bottom line, and it
Absolutely.
definitely contributes to culture too with your team.
Absolutely.
Yeah.
Absolutely. I agree with all of that.
So tell us then, Paris, what with revenue growth, I am getting tongue tied here, with revenue growth being a major goal for CEOs and business leaders. You talked about that earlier, top line, right? What strategies have you seen deliver the greatest results in growing the top line, assuming and hoping that also the controls are in place to keep more money at the bottom line?
There it is. I think number one is refining their pricing model. I mean, you can't set it and forget it, and you'd be surprised how many people actually keep their pricing model the same for a really long time, underprice their services, don't account for overhead. They're not really thinking about, again, the unique value that they're bringing and it's playing out into their pricing. So I think that's a big one and something that we work on continuously with our clients. Like, for example, one of them recently, instead of coming up with something new, because also sometimes it's too many things,
Yeah.
too many services. But what they did was they found a way to bundle things up
Mhm.
and they had better profit margin with the bundle. I mean, really, how much creativity did that take just to come together with the team? And now they're selling this bundle of services, and it's way more profitable than what they were doing before with those individually. So, bringing creativity to your pricing is probably number one. Um, and then again, back to the light and the forecasting. I mean, every client we've ever worked with has said, I've never had a long term forecast like this. So it does come up quite a bit as far as helping them to make decisions, right? Because growth is not just about selling more, it's about having really a deep understanding of those projects and those clients that are really going to be the most profitable for you so you can zone in, cut out some
Yeah.
things that are not as profitable. And we do a deep dive with them on that part. Because again, if you're just going and like, oh, more adding on more clients, like you said, you have to put a lot of people on your team on that and it's not profitable. Hold
Right.
on. Why are we still
Why
doing
are we
this?
doing this?
Why?
Yeah.
Um, and then I think my last one, unrelated to the dollars and stuff, relationships. I
Mm.
mean, it's old school, but I learned so much from these CEOs that we work with. They're so good at leveraging their relationships. They're
Mhm.
so good at building trust and doing the referral thing. I
Yeah.
mean,
Yeah.
that's a
That's
major,
their superpower,
it's a
honestly,
superpower.
because they inspire and they lead people. And
Yeah.
I tell people because I was referred to you. I'm like, you really, I mean, I'm good in the courtroom and I got some strategy, and that I still stay engaged on that aspect
Yeah.
of the services because that is part of the superpower of a CEO, of a visionary leader. But you don't want a visionary leader looking through the detailed minutia of the documents that got handed over or the line by lines of every contract that we have to review, because that's not really where I shine, right? Like, I'll help you on a negotiation strategy, but you really need to be talking to my high C and my high S over here, who's
Yes.
going to make sure that the T's are crossed and the I's are dotted. And then you and I can work together on a more strategic basis to cast a vision. And I think a lot of times with CEOs, they want to micromanage a lot of
Yeah.
stuff. And really, it's like you got to let your team. You have to go out. And I had to tell my team this. I know Valerie's sitting over there like, she just told us this. I was like, you guys, y'all don't want me here every day.
Yeah.
You don't want me around for every meeting. I cause chaos.
Mhm.
I'm like, here's a
Mhm.
new idea, guys. Oh, yeah, let me tell you about this other thing. And like, okay, well, that's great at a strategy conversation on a monthly or a quarterly. But when we're running those weekly leadership meetings and we're trying to make sure that the tasks are getting done, every time I lead that meeting, we're over time.
Yeah.
Every time. And so I try to help them see I'm best over here.
Yes.
Don't want me over here. And the
Mhm.
CEOs have to see that. Sometimes they're the bottleneck on their financial success.
Absolutely.
Tell me this too, because and we're gonna wrap here soon. I know you gotta go and we don't want to take everybody's whole day, but James is your husband. Talk a little
Yeah.
bit about James. How do you and James kind of split your superpowers between the two of you?
Yeah. Okay, James is my favorite finance guy. We met in the 90s at San Francisco State, but I won't go that far back. We've been married for, I think, 24 years.
Oh, that's so
And yeah. And what's funny was I pushed back a lot on like working in a family business because I was doing my own thing. I'm confident doing my own thing. And it was really a God thing that he invited me because he had started this business in Chicago. He
Mm,
invited me in knowing that I have the operational expertise. I came from school leadership, so I'm very much into making sure all stakeholders understand the vision and mission. And I'm more of a communicator. Like, I enjoy talking about our work. I enjoy meeting with new clients, potential clients. So basically, everything that he despises doing on the marketing side, on the business modeling side, I enjoy doing that part. So surprise, surprise, like 20 years into marriage, after I had a whole career as a school leader, I joined in Next Level Financial and basically took over the whole thing.
as we
It's like,
tend to do,
move.
us
Okay,
strong
this is
women
not
do.
right. Okay. You can't service clients like this. Like, some of the advice that we give to clients, we needed that advice. When
Mhm.
we started, it was very project based. James was very open ended, working with clients. Hey, I need this, I need that. And I was like, we can't scale this.
Yeah.
We can't scale this. So guess what? I'm going to go find us a couple of mentors
Mhm.
and let's meet with them. They've already done this. Let's ask them, how'd you do it? How'd you structure it? How often do you meet with your clients? What's the best value? How do you
Yeah.
target? So my role is really on the strategy, on growth and marketing. And I would say he's my best worker because he spends most of his time meeting with clients. And we have other folks in accounting who help him out. So he's really the face to the client. I
Yeah.
also support with the onboarding. We have an assistant who does some of that, but he has a ton of experience in finance. He started out as an auditor at EY, and then he went on to work for some real estate developers, always on the finance side. So, because he's seen multiple business models
Yeah.
in different cycles, he brings so much expertise to the table, right? And so the two of us together are superpowers. I mean, he's the introvert, I'm obviously the extrovert, and I go around sharing about what we do. And I also say that I'm the translator for the business owner who feels like they're not necessarily a finance person.
Yeah.
Finance people tend to use these terms and they seem
Mhm.
very smart, and I'm always like, dude, if you're going on and on about the uh, such and
Why,
such
oh, why?
ratio, y, oh, y, s, o, listen, I'm looking right into that person's eyes and I can see that they have no idea what you're talking about. So, what part of my role is to help to translate that, to just make it really clear, because we're not here to look smart. We're not here to act like we know it all. We're here to support the business owner with their mission so they can make a greater impact.
It's true.
They're the hero, we're the supporter.
That's so true. I love that so much. And I wanted to just kind of bring that up too, because I think it's so critical and it's probably why you have such great success too, just recognizing strengths in each other. Okay, I think we have do we have another question here? Because I know that Valerie's going to be like, you guys. Oh,
Oh,
oh, for once, I digressed at the right time. Great. Man, I'm patting myself for that one. Paris, it's been so great to talk to you. Um, Scan this code if you want to get the materials. We're going to have some things to send you. We're going to have some contact information for Paris and James at Next Level Financial. Particularly if you're in the real estate industry, a lot of our clients are in the real estate industry. You're a developer, even a sub, a GC, whatever you are, architect, engineers. You are running service-based businesses. You are running projects. You always do estimates. You also want to have great roadmaps, AKA budgets for your business, not just your projects. And so please consider reaching out to Next Level Financial. I'm going to leave it with you, Paris. What would you like to say to our audience today?
I would like to say you're doing a great job. You're running a business, you have a lot on your plate. I just really believe that most business owners are doing their best. They're working really hard, and it's important to build a good team around you so you can continue to grow and scale. That's the ticket. It's the team that you build as you're scaling. It's less about you getting more equipped and more about really building a powerful team.
Oh, yes. Couldn't have said it better myself. Thank you so much for tuning in today. We hope to see you around. Bye for now.